That's how you're put together. Hello, everybody. Welcome to another Friday, Friday the 12th. Here we go. That was perfect timing. I went. Hello and happy Friday. I didn't say feel good Friday this week. Not that I'm not feeling good. I feel good, but it's been a tough week, no doubt. But I hope you are all doing well, and I wonder how your New Year is going. So we're almost 2 weeks in so far, which is like unbelievable. But so far so good. I want to thank you for tuning in today. You're listening to the Financial Chick Show, and I am the Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I'm here live every Friday from 5:30 p.m. on 103.9 LI News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety. Apparently, I have anxiety. You reduce your anxiety and stress about money. If you want to know more about me or my firm, you can check out my website at financialchickshow.com. We're also on Facebook and Instagram at Diversified Financial Solutions. So like our pages to get updates and see what is happening. So today, you know how I don't know who does this, but there's like a hashtag for every day. You know, Daughter's Day, Son's Day. Well, today is the Work Harder Day. I don't know who the heck makes this stuff up, but did you all work harder today? I think we're all working harder today, honestly. You know, there just seems to be so much to do, little time to do it, and it's just interesting. But it's been quite a week. I entered this year, if you've been listening, I'd say I'm not going to let people rile me up or bother me, but I was really tested this week. So, and it's only the second week of the year. Oh my God. But the craziness bout of illness unfortunately hit our office. So my assistant called out on Tuesday and Wednesday and finally went to the doctor on Thursday only to find out that he has the flu. So we were down one man, and you know, we're busy time of the year. So we were definitely working harder, Brian and I. But so there was just, like I said, a lot of activity, a lot of things going on. It is just one little thing that's interesting. Every year, well, a couple times a year actually, we get information from FINRA or SEC, which is our regulatory industries or regulatory bodies, and there's a new situation with the SEC. They're trying to, track, trying to like not ban, but trying to track down, or I can't think of the word. It's just not coming to me on this Friday. But they want to limit people utilizing social media or different ways of speaking to clients that they're doing right now. So for example, texting. So they don't, we can text from our office. We have the ability to do texting through this program that's, surveilled. So the industry knows what we're doing and that type of thing. Obviously we have email, we have telephone, but invariably there's always the client that feels that they can, if they have my personal number, they can text my personal number. Don't do that. If it's a joke and you want us to do something funny, or you want to take me out to dinner, absolutely. But if it's something has to pertain to business or your accounts or financial planning or whatever the case would be, just make sure that you use the office number to do texting. Also, we may be friends on Facebook, personal friends. Let's not ask for appointments or trust questions through Facebook. This is just stuff and the Securities and Exchange Commission is tracking down big time. I usually always tell you, just call my office or give me an email or whatever the case may be. But I just want to emphasize that this is not something that we should be doing, and if we can minimize it. And not to mention, we have so many different ways to communicate today. I want to be able to get back to you. I want to get back to everybody. At least my goal is always within 24 hours. But there's so many places to check. I can't be checking all these different things. So it's email. You can text the office number, or just give the office a call. Quick, easy, and we're down the road. So that's just a little housekeeping, I guess, for the day. But what has been going on? So like I said, there's a lot happening in the office right now. So the year just ended. New Year started. First thing we're doing, all the year-end statements are coming in. So they're flying in, as they're probably flying into your mailboxes as well, and email accounts. All the year-end statements are coming in. So we're reviewing all those statements for accuracies or inaccuracies, God forbid, but checking everything out to make sure everything looks good. We've been inputting the year-end values for IRAs and beneficiary IRAs for all of our clients. So as we know, you have to take required minimum distributions every year if you're of a certain age. This year it's age 73 and over, and some of you have been already taking RMDs. And some of you, if you have inherited an IRA, you have to take RMDs. So we have 3 lists, believe it or not. We have regular RMD clients, which started at 70.5, and now we're up to 73. We have the RMD clients for the beneficiaries that were prior to 2020, and then we have the list for people after 2020 that inherited IRAs. So the IRS and the government has made it so complicated. So don't want to get yourself in trouble. If you have certain things or have questions, we can certainly help you in our office. And that's something, like I said, that we're doing right now. So people calling in, they want to know how much they need to take or want to take from their RMDs or from their IRAs as their RMD, and that's what we're here to do. So we are also preparing letters to go out to all of our clients that own different products. So we have letters that go out to all of our clients that own long-term care insurance. Now, why would you think that we'd need to do that? Well, some of you have purchased long-term care, and you may not realize that you get some type of tax credits for that. If you live, you actually get, we give you the update on the federal tax deduction. So there's 2 tables that will show you what the prior year, or what the year 2023, and then we'll show you what the new year is going to be too. But if you live in New York State, you also you get a New York tax credit. I'm like totally tongue-tied today. A New York tax credit. So you might get a federal tax credit or the federal deduction if you have your health coverage. Like if you have a certain amount over 7.5%, if you have that in your long-term care and you have high medical bills, you might be able to get a deduction on the federal side. But if you live in New York, everyone gets a New York State tax credit. So I've met with people that come in, they brought their tax returns and they said they had long-term care and they pay their premium and all of that, and I didn't see the deduction on their state tax return. So it's something you may not remember that you have long-term care. You may not know that you have a deduction. So with the letter that we provide to our clients, they could just hand it to their accountants, just like you hand your 1099s and your W-2s and any type of statements for them. So it just gives you a little extra edge to not have to remember. We do the remembering for you. So, because the bottom line is that the long-term care companies, they don't send tax forms. So this is, like I said, a special benefit that we do for our clients. The other thing that we do is the 529 plan letter. So in that case too, if you live in New York State, do you know that you get a deduction, a New York State deduction for putting money into a 529 plan, as long as it's a New York plan? You do. But unfortunately, the 529 plan companies do not send you anything at tax time, so you may not get that tax deduction. We get that letter in your hands before you prepare your taxes, so you get the tax reduction that you deserve. And we also encourage you, through the letter that we do as a reminder, to sign up for You Promise. I'm not going to go into it deeply, but You Promise is free money for college for doing things that you already do. So it's kind of like your points when you use your credit card for airline points. It's similar. College is a tough thing to save for, so any type of free money is always good. My daughter's had it since she's been born. So, and I would buy my supplies at Staples and run it through You Promise, and then she'd get money for her college. So we have college coming this fall, so it's going to be used, and it's great that we've had that opportunity. But we also want to let everybody know about the new legislation via this letter that allows parents to put money into a Roth IRA for monies that is not used for college. So you can call me for more information on this. And again, I know many of you may use the direct plan managed by Vanguard, which is also in the New York State plan. We use the advisor guided plan managed by JP Morgan. Yes, there will be a cost to work with us, but the service you get is priceless. I had a client move all of her direct money into the advisor guided plan with me, and she's so happy because she just had to call me recently and ask me some questions that she had, and she needed to get some money for her son for college. And again, it was no hassles. She was able, I knew her situation because I work with her and I know about her, you're not just talking to somebody on an 800 number that doesn't really know your situation. So sometimes it's, it's that gray area that's the problem. Black and white, I need money, it's a qualified distribution, blah, 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 blah. But they can't really tell you what funds that you should take it out of, if you should make any allocation differences. So you get what you pay for, basically. I know everybody loves the Vanguard, it's free. Nothing's free, by the way, but don't not look at the advisor guided 529 plan, because you get more bang for your buck, presuming you work with an advisor. So we are running into the break already. You are listening to the Financial Chick Show. I'm the Financial Chick, the company's diversified financial solutions. Stay tuned after the break.
Dos minutos.
Gracias.
Frío.
Muy bueno. Ay, ay, ay. Muy interesante. El mundo. ¿Sí? Sí, tú no hablas español. Muy bien.
La hamburguesa.
See, now I'm not even Spanish, and listen to this. That's good. Well, I'll teach you. No, I'm only kidding.
I'm just lazy.
That's all right. Now, you speak Spanish or Portuguese, or both?
Spanish. Well, I don't actually speak it fluently. I know more Spanish than Portuguese.
Okay, gotcha.
Portuguese, I just know a couple words.
Portuguese is hard. I understand some, but it really is different than Spanish.
Yeah, what's a Portuguese word I know? We have 1 minute.
Okay.
Potato means shoemaker.
And how do you know that word?
My dad says it.
Okay. I think it's a random word. Usually bathroom.
You're live right now, right?
Beer. Huh?
You're live right now?
Yeah. Okay.
I can't say too much.
Okay. All right. Yeah, we're on Facebook Live. Tell me after the show.
Okay.
Gotta know when to hold them.
30 seconds. No.
All right. 30 seconds.
29.3 seconds.
Oh, that's very accurate. Very, very precise. I dig it.
I had to use a calculator for that one.
Ay, ay, ay. We made it through the week. That's the biggest thing.
7.5 seconds.
Okay. So silly. Welcome back. This is Denise Nostrom, the Financial Chick. My company's in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I'm here to help you on your financial journey. Over the years, things change, and I'm here to help you navigate all those changes. So we're talking today about what happens at the financial planning office in the new year. What are we doing? So there's a lot of hustle and bustle. Meetings, everybody's still hot and heavy on their resolutions or their goals, and a lot of meetings, and but we do a lot of things in the office to kind of close out the old year, bring in the new year, and get things rolling. So like I said, we're reviewing year-end statements. We are sending out letters to our clients about their RMDs, and well, I'm just to say that we're doing internally, we're putting down all the values for the RMD, so we know what everybody has to take, and we keep a grid and keep track of that to make sure everybody does what they're supposed to do, because not doing that is detrimental and not good for your wallet. But we do prepare letters for people that have long-term care, so they don't miss out on the tax deduction in New York State, and also give them that opportunity to have a discussion with their accountants or CPAs to see if the premium that they pay will give them that opportunity to take the deduction on their itemized form. We also send out letters for the 529 plan. And the 529 plan, again, long-term care 529, the companies do not send you information like you get the 1099 or your W-2. These deductions, you have to know about them. And if you don't, you might miss out. And like I said before the break, I've sat and I've met with new people, and they've come in the office, they brought their tax return, they showed me they had long-term care, and then they showed me their taxes and they didn't get the deduction on the New York State form. So, it's just, listen, you're paying for this, you want to get any type of benefits that's associated with it. So we try to help put that stuff in your hands, so we know that you're going to get everything that you need, and it actually reduces the overall cost to you too. So that's important. We also send out letters for people that do IRAs, especially the deductible IRAs. So say, for example, you work for a company, they don't offer 401k, but you do put money into an IRA, you can deduct that money from your income. So let's just say you make, I'm just going to throw out a number, 30,000, and you put 2,000 into an IRA, a deductible traditional IRA, you would only pay taxes on 28,000. So again, you have to tell your accountant that you're doing this. If you don't tell him or her that you did one, you're not going to get the deduction. So we try to help our clients by sending out that letter so they can just hand it right to the accountant and know that they're going to get that proper deduction. And on the flip side, if you don't have a plan, it's probably a good idea to do that. And you have up until April 15th to do one. So if you meet with your accountant and you realize that you have to pay some taxes, why not put it into your plan where it's your money instead of sending it to the government into the black hole that you'll never see again? So that's just an aside. We also send the letters out for people that put money into the Roth IRA. So the Roth IRA, we tell them what their amount was. Again, this can be put on the tax return, so you can give this letter to the accountant as well. Usually a good practice to do that. Although you get no deduction or anything like that for the Roth IRA. The Roth IRA is more for the future. That's a good plan for the future. And so we tell them how much they did, but we also remind them how much they can do for the coming, or for the prior year. So for example, if they did, if they were able to do 7,000, they did 6,000, we'll say, listen, if you want to do the max, you can do another 1,000. So it kind of keeps people on the mark. And I just spoke to a client today, and he called up and he's like, I want to do the max this year, so increase my monthly contribution. So we want to do the best we can for ourselves and make sure we're getting all the benefits and maxing out the benefits if we can. And then finally, we love our educators, our teachers. So we send out educator letters that we remind them of deductions that they can take, and more importantly, to review their 403B plans with us. So we don't want to set it and forget it. Again, teachers are great savers. They're always putting money into their plans, but they don't rebalance or review their plans as much as they should. So that's something that we suggest that you do, and also suggest maybe looking at your finances and seeing if you can increase and put more money into the plan. It's always a good thing. Again, you don't want to set it and forget it either, because think about inflation. Like if you started with $200 per paycheck, it's a new year, try to bolster that, maybe $250, maybe $300, or more, if your budget allows. So it's not going to hurt you. You're never going to go, oh, I saved so much on taxes and I saved too much for retirement. You'll never say that. So if you can do it, and if you need a person to motivate you to do it, call the office, because that's what we do. But also, if you are a teacher and you don't have a 403B plan, or you wish to evaluate the current plan to make sure that it's in your risk tolerance and you're doing the right things, you can go to my website at financialchickshow.com, and you can contact us that way, or you can call us up at the office at 631-758-8691 to set up an appointment, just to do a complimentary consultation to take a look at what you have going on and see if you are on track and everything's looking good. So that's basically what's going on in our office. There's a lot happening, and the new year is always riddled with a lot of different things. But in other news, there's a bunch of different things that you want to keep in mind to keep your financial house in order. So, I most commonly talk about investing and insurance and disability and college planning and all of that kind of stuff, taxes. But, there is, there's a lot of other things that we take a look at. And being a comprehensive, holistic financial planner, it's not just those things. There's more, because we want to protect the whole person, not just a portion. So, a lot of times, people just deal with the investments. They don't want to deal with anything else. But, the investments relate to other things. So one of the thing that we have to endure is unfortunately not being prepared when things go bad. Now, there are 3 leading causes of death in the United States, and most people correctly guess cancer and heart disease as numbers 1 and 2. But what is number 3? And it happens to be medical malpractice. So people have guessed accidents, Alzheimer's, strokes, whatever, but it's actually medical malpractice. The doctor's fault? Nope, it's our fault. We go to the hospital totally unprepared. 10% of Americans over the age of 65 will take 11 different prescription drugs this year. If you're in an accident or brought to the hospital and the hospital administers a pain reliever and the combination of what you are taking and what they have given you kills you, have you ever had a heart attack? Do you carry nitroglycerin with you? Have you been warned that the combination of Cialis and nitro will also kill you? Is this a risk you're willing to take? Or maybe when they ask what prescriptions you're taking, you mispronounce Omicor when you meant Amicar. Yes, medical malpractice is the 3rd leading cause in America. We don't want this to happen to you, so it's time that you get your house in order. So the first thing, resolution number 1, is to don't go to the hospital ill-prepared. If you remember the story of Terry Schiavo from Pennsylvania, at age 26, Terry had a massive coronary and was resuscitated, but experienced irreversible brain damage that left her in a coma. Basically, I'm going to have to roll through because the time is going so fast, but she did not have a power of attorney. Didn't have a healthcare proxy or a living will. So what happened was her husband said, listen, I know what she wants. She wouldn't want to be resuscitated. She doesn't want to be left on life support. But her parents said, no, we're keeping her on life support. So make sure you get a healthcare proxy and a living will or a health directive. It's the most important thing. Again, these are all things that have your voice when you may not have one. I'm just going to roll through. We'll do another show on this, but number 2 is sign a healthcare directive and living will, which kind of went to the same thing. Resolution 3, create or update your will. Very, very important. Again, your voice when you may not have one. Resolution number 4, review and update beneficiary designations with life changes. It's a good idea every year at this time to take a look. You might have got married, you might have got divorced, you may have had a niece or a nephew or an uncle, an aunt that you don't, whatever. You may have to make some changes. Take a look and make some adjustments. Number 5, regularly review your legal documents. And number 6, establish an estate plan. So again, I went through that really quick. We could probably just do a whole show on that, but there's a lot to do. You don't have to do it yourself. That's the bottom line. Come in, visit me. This is what we do. We make sure that your whole person and your whole plan is in place. And that's the story. So I want to thank you for tuning in today. If you have a 3-day weekend, I don't like you. No, I'm just kidding. I could have one too because the markets and more will be closed on Monday, but I just can't take the time off right now from the office because we're super busy and we've been down 1 employee. But enjoy your day off, everybody, if you do have the day off. And remember to do better, be better. Take care for now, and I look forward to being with you again next Friday. Ran a little bit late there. A lot to talk about, so much going on. All good stuff, but just crazy. But trying to get you guys all ready and prepared for the new year. And that's it. So have a wonderful weekend and stay dry because I think it's supposed to rain again. And we'll talk soon. Bye.